Hello, everybody. Okay, I think we are live. Let's give one couple of minutes. Okay, let's get started. Hi everybody. Welcome again to this series of webinars that we are focusing on green investments. This is our second seminar or webinar in this case that we are having, and we are very excited to have Rosemary with us. Just to give you a little bit of the context of the series, we are very proud to partner with IFC from the UNWTO in order to promote green investments. We are trying to share a little bit of the knowledge of what is all this about and how can we develop different finance mechanisms down the road. For this purpose, we develop a series of 5 different seminars, and at the end of the process, we are looking for sign up for people for different accreditations with the EDGE program, so they will be gain some accreditation to be experts on the matter. From our end, my name is Miguel Angel Figueroa. I am in charge of the investments in the UNWTO, and I'm here to help. In our case, from the UNWTO, we are looking for partners. We are trying to identify and to map out the aggregators along the value chain of the hotels and hospitality industry in order to partner with different developers, with different investors, brand managers, in order to strengthen their capacities. And we will partner as well with institutions like the IFC in order to promote different funding mechanisms. The purpose of the webinars is we have 3 main objectives in this. First is to identify these aggregators across the value chain of the hospitality industry. And the second objective is to promote different trainings on green building adoption and the transitions to enable sustainable investments, especially after this post-COVID pandemic. And the third objective is to facilitate different sustainable investment mechanisms to access to green finance opportunities. And in order to do that, we focus on 4 main stakeholders. First are the governments that will support the ecosystem, that will provide the regulations, that they will provide incentives. So we will invest in these projects. The second stakeholder are, of course, all the aggregators along the value chain of the hospitality industry, mostly about the hotels. The third stakeholder are institutions like the UNWTO, who are looking to strengthen the capacities and to provide the different skills and training with different knowledge that we have. And the third one, of course, are funding institutions and financial institutions that they will provide these mechanisms and these financial vehicles in order to get this done. And in this case, this webinar is based on how to access to these funding mechanisms, and in order to do that, I will introduce actually to Rusmir, who will be joining us in the next 3 webinars. He is the operation officer from the EDGE Global Business Development Lead from IFC. And we are very glad that he is working with us in these webinars. He has so much experience. He is very used to do webinars. Just before we get started, he was telling me sometimes he is very early in the morning trying to overlap and to synchronize with all the people from all over the world. So I don't want to take more of your time, Rusmir. Thank you so much for joining us. I will be helping you.
Thanks, Miguel. It is great to see everybody. You can see the numbers rising in our participants, so it's great. Let me I will share my screen and go right into the presentation. And we're very, very thankful to UNWTO for organizing these meetings. And we're very, very excited to partner with you and go through the education. Let's see. So just a few notes about this webinar. This is a second, as Miguel mentioned, in a series of training IFC is doing with UNWTO. As always, the recording and materials will be shared on the website. The recording from last week's training is already available, which was the overview into the program. Materials will be shared in a few hours. We posted on the landing site for the training, which you can see in the link below. And during the webinar, please use the chat feature to ask questions. We will answer them at the end of the session through Miguel's moderating. I want to make sure I set a few expectations about the topics covered. I want to make sure people understand I'm not an expert on the post-COVID recovery in the industry and don't necessarily have resources that will show how to open hotels safely and bring back customers. IFC does have a COVID facility for our existing clients, and we're happy to talk to you about access to that if you have worked with IFC before. But more importantly and more broadly, we want to use these unprecedented times when most sites are closed to take a look inward and understand how to return to a new and better normal post-COVID. This will include looking into how to maximize your profits by accessing green finance. Profits is, of course, revenue minus costs. Revenue will depend on the willingness of tourists to return to travel, but we do know, and we will show you in our case studies, that travelers are increasingly looking for green destinations. When tourists return and they have many options to choose from, you can differentiate yourself with a green label. Costs consist of both operating costs and costs of financing. I will show you how resource efficiency can help you deeply cut operating costs for your hotels. But you also have a possibility of accessing cheaper or better financing through international green finance, either to refinance existing projects or to launch new ones. So, given this approach, our agenda today will include several sections. We will take a look at IFC's offer for green buildings. To get us on the same page, we'll look into what makes a hotel green. I'll walk you through the business case for sustainable hotels, and we will do a deep dive of several green finance mechanisms. Each of these will be illustrated with case studies, and I hope we will have time at the end for Q&A. Before we start, I'll introduce IFC. IFC is a member of the World Bank Group, and we are focused on solutions for private sector development. Part of our mission is to create markets that support climate business. IFC created the Green Building Market Transformation Program for a comprehensive approach to sustainable buildings. It is a four-part strategy that includes working with banks, investing directly into the building sector, advising governments on green building codes and incentives, and the EDGE certification program. This is another way to understand IFC's offer, ranging from broad market creation efforts and working through specific types of advice and investment. So, part of your access to green finance may be to work with IFC and other development finance institutions that we work with. We're actively looking to finance projects in a one-to-one relationship, as well as to develop country or regional platforms through local banks, for example, for retrofits. You will see at the end of this webinar a call to action to connect with IFC so we may deploy these in one-on-one interactions with you. Let's take a look at how sustainability can be implemented in the tourism industry. I will be specifically looking at hotels, recognizing that tourism has wider implications with travel and other logistics. Some of the ideas presented here will work well, for example, for airports. I will peel back each of these mechanisms and illustrate them with case studies. On the top, you will see technical pathways. Here, we're looking at three things: super efficient new hotels, Any hotels still in pipeline for development should be able to adjust project design and construction toward efficiency. Second is deep retrofits for existing portfolio. These retrofits can be implemented now when facilities are unused, or during future refurbishments pre-scheduled for aesthetic updates. Finally, hotels operate all day and all night and need tremendous amounts of energy. At the same time, they have large roofs that can be used for solar rooftop. We'll show you how the declining costs of renewable energy will make renewables more attractive than grid or diesel generator alternatives. We'll also talk about financing pathways, and I'll have a slide for each of these at the end. Both new hotels and retrofits can be financed directly by a local or international bank, development institutions such as IFC, a REIT, or a real estate fund. In some cases, large banks such as IFC may partner with local finance institutions. We give them credit lines, which they on-lend to local projects. This model and the next one, our aggregator model, is particularly important for retrofits. When a bank like IFC looks for projects, we want them to be of a certain size, which will cover our somewhat higher transaction costs as we have more due diligence. Retrofits mean a smaller ticket size than a new projects. So large banks will need aggregators to pool these projects into a large platform. You will see a call to action to help us create such platforms. Finally, I will show you how both banks and developers have utilized capital markets to finance their projects. Before we go any further, let's take a step back and define exactly what we mean by a green building. IFC created EDGE in part to answer the need for a common definition of a green building that will connect investors, developers, buyers, and regulators. International green building definitions agree that a building must obtain a local or international standard of green building certification as verified by an independent party. The building also needs to be at least 20% more resource efficient than a comparable baseline building in the local market. Finally, in order to satisfy green finance requirements, projects must have quantified impact reporting on an individual project basis and on a portfolio basis, such as energy and water saved or reduced GHG emissions. These international standards cut across standard-setting bodies, including investor-oriented associations, such as the International Capital Markets Association and the Climate Bonds Initiative. IFC also works with real estate bodies, such as GRESB, and disclosure platforms such as CDP. Why is this definition important? It allows our clients to access important sources of green finance. One case study is Acorn in Kenya. They utilize the relationship that EDGE has developed with the international standing bodies and realize they can launch a green bond for their portfolio of green student housing. You will see that during the webinar, I will have examples of both hotels and other types of buildings in my presentation, as case studies from other buildings may better illustrate the point. Acorn was Kenya's very first green bond, and the company received a lot of attention when it launched the trading on the stock exchange. The bond was launched entirely for a collection of new EDGE-certified properties. The Kenyan government has now passed a law that makes interest from green bonds exempt, and this should further motivate investments through this instrument. These definitions also allow for a refinance of existing projects. HSBC structured a green loan with Indospace, a large warehouse operator in India. Green loans are a sister instrument for green bonds and a certified way for green finance mechanism. HSBC invested $130 million into Indospace for a refinance of portfolio of EDGE-certified companies. Green Framework was audited by Cicero, a leading provider of second opinion in green finance. IFC's Edge solution allows you for a self-assessment of your project against these international standards. The training on Edge will take place in our webinar on June 25th, though you can start utilizing the software today from edgebuildings.com. Edge, which stands for Excellence in Design for Greater Efficiencies, consists of 3 components. First, the free software helps you choose the most cost-effective way to build green. The software is free and can be accessed from the Edge website. Second, Edge is an achievable green building standard with a 20% resource efficiency criteria and a local baseline that has already been predefined for 170 countries. And third, Edge is a certification system to verify and reward green building projects through a green label. Remember that only certified projects can access international green finance. Your projects may already meet green standards, or you may need to put in some improvements. Edge can tell you which area you can focus on through our financial calculator that looks at return on investment for each green measure. I promised to give you more case studies on the business case for sustainability, talking about both the revenue and cost side of the profit margin. Let's take a look. IFC collaborated with the International Tourism Partnership to produce the business case for sustainable hotels paper. ITP is a member organization of some of the largest hotels in the tourism industry, including, for example, Hyatt, Hilton, Marriott, Radisson, and other hotel brands. Through case studies, we identified a data-driven approach to sustainability in the sector, which includes boosting profit margin through utility savings, increased revenue through differentiation, future-proofing your investment strategies, safeguard against policy risk, increase value through certification, and ensuring energy security. The full paper is available now online, but let's take a look at each of these with a few case studies. The owner of a conventionally built hotel typically spends more than $2,000 per guest room each year on energy and water consumption. And this represents anywhere from 6 to 20% of operating costs, which is the single largest line item after staffing. The benefit of resource-efficient hotel only increases with time, as energy prices often rise faster than consumption. At the same time, there is a big misperception of the incremental cost for efficiency. According to IFC's research, and again, this chart is published in the business case paper, most hotel properties in emerging markets could reach 20% resource efficiency as compared to the local baseline, with very little incremental cost and very fast payback periods. These properties have the opportunity of tremendous utility bill savings, as high as $264,000 in annual cost reduction. One case study is the AC Hotels in Veracruz, in Mexico, under the Marriott Hotels brand. The hotel employed sensible measures, such as efficient lighting, HVAC, and plumbing, and this had no increased cost to their plans. But the savings were tremendous. The utility reduction resulted in predicted $87,000 savings per year. The hotel in Veracruz was a new hotel being built, so it had a very easy time changing its design to meet efficiency criteria. But what about retrofits of an existing portfolio? Host Hotel and Resorts is one of the largest hotel owners and real estate investment trusts, called REITs, in the world, with over 52,000 rooms across almost 100 properties. Implementing a range of water and energy saving measures across their portfolio, Host Hotels find a $40 million return on investment, One of the measures is on-site wastewater recycling, which led to 70% reduction in water usage. ITP's research, which utilized CDP, one of the organizations that IFC also works with, shows a payback period of 2 to 4 years for most measures in existing hotels, resulting in incredible savings. Consumer awareness and demand for greater sustainability are increasing for both individual and business travelers. When hotels reopen after COVID, there will be plenty of supply and not as much demand. Having a green label will increase your differentiation and your offer to the market. For example, a Cornell University study found that the sample of LEED certified hotels in the United States had a higher ADR, average daily rate, and RevPAR, revenue per available room, over non-certified hotels. A study by TUI Group found that for now, only 1 in 10 travelers book a sustainable room, but over half would book more if the resources, such as labels, were more readily available. In business travel, 53% of North American-based companies, including multinational companies such as Apple, Coca-Cola, or Google, do have sustainability programs that affect their contracts with travel suppliers. Sustainability matters on revenue. Once your project is certified with EDGE, if you choose to work with us, IFC will extend marketing support to you to promote your property. Our clients have won prestigious awards such as the Financial Times Transformational Business Award, and they have seen quicker sales and attractive positioning to international buyers. You can see more through our EDGE marketing toolkit. As mentioned, sustainability is also a solid investment strategy. On the one hand, you have groups of investors committing to green action. One such group is the Climate Action 100 Plus, which has 373 signatories with a staggering $35 trillion of assets under management. These investors are coming from 28 markets, but are working across the globe. Another group is the multilateral development banks, such as IFC, or other bilateral development finance institutions, such as UK's CDC. All these institutions have green commitments and won't be able to finance projects unless they comply with green criteria. Sustainability for institutions like IFC is pretty much the price of entry to work with us. On the other hand, there are bodies such as the Task Force on Climate-Related Finance Disclosures, which will be requiring banks to disclose their exposure to brown assets, as well as to climate impacts, and to disclose their green strategies. If you're a financial institution, working with green buildings is a low-hanging fruit for you. Some of IFC's partners are already providing incentives for green buildings in their markets. You can see that the incentives range from technical assistance to incentivized loan pricing. Banks do this because green buildings are a better investment for them and allows them to corner the market in their country. However, the biggest need to catalyze the market is awareness, and we're extending a clear call to action with the banks on this call to work with us. I will skip the government incentives as these will be the subject of our webinar next week, and instead I'll go directly into energy security. One of the things that both new and existing hotels can do without a significant disruption to their operations is a possibility for on-site solar panels. As our business case paper shows, there are many benefits to solar, including decreasing installation costs and even power purchase agreements, known as PPAs, with no CapEx costs. Renewable energy provides price security. In countries where utility prices are increasing, stable power purchase agreements ensure a long-term energy supply. They also provide supply security. The sun is always shining, without the possibility of disruption of supply of diesel for generators or grid blackouts. Systems can be supported by a battery, and IFC has done a lot of research to show that solar plus battery is very attractive in most places around the world as an alternative to conventional supply. One case study is Soneva Fushi Hotel in the Maldives. The hotel structured an agreement with Yingli Solar that meant that no capex for hotel, as it's essentially leasing the panels you see in this picture. However, the price of the power was 40% cheaper than the supply needed with diesel generators. Okay, now that we understand the business case for sustainable hotels, let's take a look at the financial mechanisms that can allow deployment. As we look through these different models, this is another reminder that IFC is looking to collaborate with you in these efforts. We have an offer for all levels of the hotel value chain, from franchisees to brands, owners and operators, and investors and REITs. If you're a consultant on this call, we will need your technical expertise to help owners and operators and banks reach the technical requirements, and you should attend our EDGE training. The most straightforward way is for hotels to get a loan from either a global bank or a local financial institutions. These banks are using their own resources to fund projects. In many of these cases, the brands serve as important project sponsors, which show that a local hotel is working with a reputable international off-taker. From EDGE, both global and local financial institutions can receive training on the steps to launch a green real estate program, or even training on how to process new instruments such as green loans. IFC is also looking to directly invest in projects. As I mentioned, we do look for projects of a certain ticket size, which typically means investing in new projects. But a portfolio of refurbishments across a large portfolio by a single owner could be something that we could look into to finance directly. For the hotels, the EDGE software allows you for self-assessment to identify green measures, whether to change the design of a new project or to identify refurbishment options for existing ones. EDGE will also help you calculate the size of a solar system that you may need. In EDGE, you can also identify yourself as a project actively looking for financing. IFC will share these lists of projects with financial institutions we work with, including local and global banks and DFIs. Finally, brands can use EDGE for impact reporting. They can deploy additional assistance to the projects through, for example, a master technical agreement that helps the hotels in their portfolio get up to speed. We have executed these master agreements with other institutions. In the second model, institutions are investing in local banks, which then on-lend to local projects. This helps institutions such as IFC reach projects of a smaller size where we otherwise would not be able to invest. The investor in the bank could be IFC or another development finance institution, or an institutional investor such as the Climate 100 Action Group that I mentioned. It could also be the central bank if the government sets aside a pool of funds for this type of projects. Next week, in the government-focused webinar, I will show you how the Central Bank of Bangladesh set aside a pool of funds for local banks for industrial projects. These pool of funds are actually being shared at a concessional rate, which the banks then pass on to their developers. And we will discuss how this model could be replicated for hotels. Where we see hotel chains participating in this case is issuing strong corporate requirements for refurbishments of existing portfolio. The brands tell us that they can't push their suppliers beyond your comfort zones, but if we can show a strong interest and willingness to participate, we can make this case for stronger action across the industry. In addition to training, IFC can provide to local banks credit lines or risk-sharing facilities. We even have a pool of concessional finance that can be deployed for demonstration projects. Across all the stakeholders, certification is used as a means of compliance to cut back on the transaction cost of the bank processing the loans. The aggregator model is one possible model for refurbishments. The idea is to bundle together different small projects. If there's one big portfolio owner, then we can work through the direct investment model. But the aggregator model helps us put together properties owned and operated by smaller firms. Aggregation can be done through different platforms. It could be that the hotel brand helps us put together all the projects in a particular country or region that are looking for financing. We could work with UNWTO through the investment forums and find ways to identify projects interested in financing through this mechanism. Finally, local or regional government, particularly the ministries of tourism, could be the platform that brings all these projects together. IFC is very much interested in developing this model, and we have investment officers looking to identify countries for pilot projects. If there's a particular alliance of stakeholders in your particular country, please let us know and we can make sure that your case gets a first look. IFC could then invest in a platform like this ourselves, or in many cases, we also bring other global banks and institutional investors through what we call our syndications program. The investment will be structured so that the savings pay back for the upgrades, and the certification will again serve as the compliance and reporting mechanism across the entire platform. Finally, one of the last mechanisms I will cover today, although it's not necessarily the last way this financing can be done, is through capital markets. IFC collaborated successfully with the Climate Bonds Initiative and the International Capital Markets Association on a training on how EDGE works for green bonds, and that is available for viewing now. You already saw a few examples in our case studies, which took place through green bonds. Green bonds are a fast-growing mechanism. They're being sought after by institutional investors or asset managers who are looking for long-term investments, for example, pension funds. They're also being bought by investors who have committed themselves to climate action. I already mentioned the trillions of dollars under management by the Climate 100 Group and other investor groups such as BlackRock. A green bond can be issued by various bodies in the hotel chain, which have enough projects in their pipeline to justify a sizable bond. A bond needs to be about $50 million to justify the transaction costs. Green bonds are just like normal bonds, but they have specific use of proceeds criteria. However, the interest in green bonds has been vast. This interest typically leads to price tightening of the bond or a diversification of the investor base. In short, the bond issuer can get some cheaper financing. The bond can be issued, as I mentioned, by various bodies. One is the hotel brand, if they want to serve as a mechanism to help their smaller owners and operators. If there's one large owner, then he or she can also issue the bond for their portfolio. Local financial institutions can also do bonds, and they can just clarify the use of proceeds for hotels. Finally, the government, both sovereign and local governments such as a city, can issue a green bond. The bond can then be deployed for new projects, for refurbishments, but also for refinance of existing projects if the cost of financing is cheaper than the original interest rate. Banks which own large portfolio of loans can even securitize the whole portfolio and free up cash for new projects. Remember that only certified projects can access these finance flows. So while EDGE can be used for now for free for self-assessment, certification is ultimately needed to satisfy compliance. IFC has an offer for advisory services to set up a green finance framework. And in some cases, we have been the buyers of these green bonds, particularly when it's a first of bond in a private placement. You saw in our green building definitions that EDGE software is pre-approved for use of proceeds criteria that satisfies green finance standards. We've covered a lot of material today, and I hope that we have time to turn to Q&A. Today was a preview of the tremendous resources we already have available through IFC and EDGE, many of which are free for you to use. Some of the next steps and call to action to you include: attend the June 18 sessions for governments, and on June 25th, attend the technical training on EDGE. You can receive deeper technical training for your staff or your consultants. We have online modules and live stream training offered now monthly. That is one of the last pillars of this education. And once you pass the EDGE exam, you will be formally accredited by IFC. When you hire technical consultants on the projects, make sure they already are accredited by IFC and knowledgeable about EDGE. Utilize all of our marketing materials and the case studies we have developed for your proof of concept conversations. Make sure you're already utilizing banking or government incentives present in your market. Finally, work with IFC on regional platforms and express your interest for investments. Thank you again for joining us today, and thank you to UNWTO for organizing this session. We appreciate your interest in EDGE and IFC's offer, and we hope you will join us in transforming the hospitality industry. So I'll turn over to Miguel to moderate the Q&A.
Thank you so much, Rosemary. I appreciate it. Super clear. Yeah, there's a lot of things that you covered, and we are excited about that. There are several questions now. Okay, let's dive into it. It says from Andres, who is the certification body or the accreditation body for the EDGE criteria? Can you elaborate on the criteria and who is the certification body?
Great. So IFC has licensed operators on global and in some cases on local level. You will find that from the certify pages of the EDGE website. So once you go to edgebuildings.com, you can click on certify. The two global operators are GBCI, which is the same body that administers LEED. So again, you can see how we are collaborating with other green building mechanisms. And the other is a consortium of SGS and ThinkStep. So on the June 25th webinar, I will go through both the EDGE standard and how to reach it, as well as the cost of certification and the process for certification. So I'll make sure that you log in at that time.
Yeah, just to add that, I was talking with people from Booking, for instance, and they already have developed their own methodology to do this as well. And I guess they are very different standards, and I think you can, I mean, some of them overlap, right? So it would be great if they can join us on the 25th as well.
Absolutely. And one of the things that you will see is standards that are pre-approved for green finance. And so we have worked very, very hard with many different bodies. You saw International Capital Markets Association, Climate Bonds Initiative, GRESB, CDP. So having a standard, sometimes it's not enough. That standard has to be approved by other bodies. One of the examples I can show you is IFC enabled, for example, an $800 million investment in warehouses in Europe. And we were able to do that because we had one international standard that brought everybody together. So that's the important part. An EDGE has been pre-approved by those bodies as what we call use of proceeds criteria.
Perfect. Let's go to the other question that is repeating as well in the chat. It says, what is the minimum of the ticket size that the IFC is looking for investment. And in the question gives the example of $2 million, and if that will be something interesting for IFC.
2 million is a little bit small for us. There could be some cases where it's a nice, demonstration investment, so it's not out of the question. But in a case like that, we will probably rather work through local finance institutions. So IFC can only fund about 25% if it's a project finance or some sort of project. And we, if you think about it, we might want to do about 10 million, but then the project has to be about 40 million. So these are not black. The 25% is a black and white rule. The ticket size is not, but 2 million is typically a little bit smaller, although not out of the question. So what we want is to pool these resources either through a local bank or through some sort of a regional platform that can be organized where we can do this type of on lending.
Yeah, just to add up there as well, from the UNWTO, when we talk with different investors, the average size for these kind of projects are like 60 to 75 million, and especially from the brand managers. And again, they look for especially 80%, like 70 to 80% of equity on the projects, and the local investors have to provide that as well. And they are partnering with people who are able to bring another 25, 30% to the project, and is very standard in the industry, especially in the multilateral cooperation, the 25% and the ticket size from 50 million and above. The other thing that is also important that I think you mentioned as well is if there are several of these small investments like 1 million, 2 million to all the way to 5 million, it's a really good idea to gather those into an aggregator and a platform so we can work together with different small projects. So it could be a big portfolio of different projects that they might be bankable. That exactly that you can maybe emphasize.
So you'll see, model 2 was through local financial institutions. Model 3 was to create sort of a separate, maybe a special purpose vehicle where IFC, other institutional investors, or a local bank invest. Banks typically are reluctant to take IFC money if they don't see a pipeline of projects. And so what we want and what we do it in Edge is we allow projects to self-declare that they're looking for financing. So then if we're able to know that, let's say in Nigeria, we have 10 hotels at 5 million who need financing, we can go back to a local bank and say, we have 50 million for you to work with, or maybe it's 100 million for you to work with. So we need collaboration to demonstrate the need for financing, either to a local bank or to really set up, a separate special purpose vehicle that will be an aggregation platform.
That is another really good question along those answers. It says, first, excellent webinar, Rosmir. And then it says, in the aggregated model, what comes first, the identification of the green technology measures or the identification of the country's risk in order to fund different projects?
Probably country when it comes to us, and the willingness of people to collaborate. So if we know that we have 10, 20 operators who are willing to work with us, we can help you find the technical measures on that end, because that's, to be honest, with Edge, that process is a lot simpler. Finding people who are going to work through this is a lot harder. One of the things I always say with green buildings, we're not sending a man to the moon. We're putting low flow taps in, water faucets. Maybe we're putting some solar on the rooftop. This is all technologies that exist. We just need the owners to believe us that this will save them money. So we're trying to come from IFC side and produce case study after case study after case study that says, this is a return on investment. This is something that's really good for you. You will recover, your investment. And in many cases you saw in the Maldives, there was no investment. It was free, right? Yingli Solar came in, put the panels, and the hotel was still saving money in the end. So there are lots of finance mechanisms, but what we can't influence is the belief that this is really something that's going to move forward.
Okay, great. Trying to filter the questions. Um, in analyzing different case studies that you were showing and also that you will show down the road, is there any statistics that shows the preference of the guests for green hotels instead of the standard hotels? Can you elaborate that? Because I feel it's important to people, I mean, for people to understand what is the value reputation and the brand that can, you know, the equity that they can gain from these kind of certifications. Can you elaborate that?
Absolutely. And you will see that there was slide 22 in the presentation. And and the links to the studies are available in the business case for sustainable hotels. So many case studies show that green certified hotels do have higher ADR and RevPAR over non-certified properties. There are some studies that show that for now, only 1 in 10 travelers are booking sustainable room, but over half would if they had better labeling, if the hotels were actually labeled. So this is where we need support with institutions such as Booking to help us introduce the green labeling into the booking mechanisms. And then half of North American-based companies, you know, big giants, you know, they're multinational like Coca-Cola, Apple, Google, have corporate sustainability programs that are going to affect their contract decisions with suppliers. So the case for utility savings is a lot stronger, but we think the case for consumer preferences, especially, as I said, the supply will continue to be high, the demand will be lower. How will you differentiate yourself in that case? And that's where the case studies come true. So the business case for sustainable hotels has a lot more data drilled. Today, you just saw a preview.
Yeah, just to add up there, like we have different studies from the UNWTO and the projections for the next decade, for instance, in terms of the behavior of the consumer is younger, right? They travel more for shorter periods of time, but the consumption responsibility that they have is higher than ever in the market. So I think it's very important to not just identify these financial mechanisms to develop this, but also to pass the responsibility to the consumer. And there's one question similar among those lines from Diana. It says, how can we involve customers and tourists, for example, into the process? It would be interesting to create an eco-credit system that encourages this green behavior.
I have not thought of that one, but certainly I think, you know, labeling in booking platforms will be really, really important. And where IFC can help you is to promote your project in the local context. So you will see that once the project is certified, we have a marketing toolkit, that shows you many, many different ways that you can then promote the green part of your project.
Cool. Let me move on to the government questions. It says you talk about the private sector. Can you give more examples about city governments into the national and local level? And how can you promote investment mechanisms for green hotels and constructions? What do you recommend are the first steps towards this goal?
The first step is to join us next week, and that will be exactly the topic of conversation. So I focused on private sector today. Today was much more for sort of hotel owners, operators, and investors. Next week is really about the governments, and the following week, it's good for investors, but it's also will be great for consultants to join. So we'll keep it focused on that. IFC has a government page on our edgebuildings.com website. And I'm going to show you the case studies of what other both national and local governments have already done.
Yes, I'm trying to integrate those questions. It says, can you elaborate on what is the process for a new hotel to get some funding from IFC once the certifications are done?
So you can start working with us. You can, send me a prospectus, for example, and I will then send it out to our investment officers. So I work on sort of general market preparation, and then we have investment officers who would actually process the hotel investment. So if you let us know what, what is the, maybe some drawings, prospectus, and how much financing are you looking for overall. And then one of the things, as I said, IFC likes is a participation of a sponsor. So, who will this hotel be affiliated with? What is your track record in this market? We want to know that we're working with somebody who's a credible partner. Once we have that, our investment officers will start putting the information through and take a look at what the process looks like.
And if I can add there, that is exactly what we are trying to do with this series. We are trying to identify these aggregators, the small hotels, or the hotels that actually need some financial mechanisms that try to identify what are those needs, and we can develop together some tailored strategies for you. Yeah. And the other thing that we can do or help from the UNWTO is to work along with the national governments. Since our main customers are state members, so it will be for us to work with them to create these incentives and to bring together the private sector to develop like better strategies to do that as well. Mm-hmm. Just for you to know, we have we received like about 800 plus registrations. And about like 35, almost 38% of those are hotel owners or like, so it's really cool. We will be sending information and we will be segmenting those database to ask those questions, and then we will give you back on that regard. Another question that is very similar to this and is really interesting. It says, can we cluster small hotels in a very specific region or country to apply for the certification across those clusters?
You can. Actually, we haven't done that before, but that would be an interesting model. Our certifiers do have a portfolio pricing model because they know that projects kind of from the same owner coming in is ultimately less time for them due to transaction costs. So, what they look for is what is going to be the cost of time to do this. So again, if you have a regional platform where you show that there is a technical expert that's being involved, our certifiers could potentially work with you and do a portfolio price, even though it's coming from different owners. IFC can help facilitate that. As I said, we are not the certifiers ourselves, but we can send you that information. You can get a quote for your projects from our certified pages, and then if you want some sort of more bespoke pricing, you can directly contact our certifiers or contact me, and then I will broker a conversation with them to help you cluster these. That's an interesting one.
Yeah. Yes. Yeah, and again, I feel like it depends of the association that we, identified with different hotels, especially from countries where the tickets are very small. We receive a lot of those projects, and it's better if we can, cluster them and develop some institutional kind of approach with them. Okay, to move on. It says about the EDGE. How can I become a certificate consultant or technical consultant from EDGE?
So again, step one is come to the June 25th webinar. You can play around. The website is open, it's free, and we are issuing a call for people to start signing up for deeper EDGE expert training. There will be one later on in June and throughout the summer, I guess, at least in the Northern Hemisphere. So, and there is a pre-recorded, self-paced online training, and you can sign up for that as well now. You don't have to wait for that as well. So you will see on our page, edgebuildings.com, there's an area called events, and underneath it is a specific tab for training, and that's where you would be able to sign up.
Perfect. Moving on to the financial institutions, it says, Jesse, how the funding entity can cooperate with IFC in order to request their clients to work with the certification or green finance.
So there are many different sort of levels of collaboration. IFC is interested in financing such a bank, for example, we could do small training for you. You know, we can do the edge process and do kind of light touch training, or there can be a longer what we call advisory services agreement, where there's a longer back and forth between IFC and the local bank who's looking to do this. So we have different mechanisms, and again, you can let us know what you're interested in. IFC has helped banks before identify the pipeline, structure their process. We have a lot of learning on different levels that are needed to make sure that the process is credibly green. And we can obviously teach that, and we have training for loan officers on how to process these loans and how to understand the F certification.
Is that related with the syndication that you develop with different institutions as well?
Syndications is more when IFC invests in a project, we will look for other funders to come along with us. So let's say it's a brand new hotel, we can invest, as I said, 25% of the project. We may go to other like Citibank, Deutsche Bank, Standard Chartered and say, hey, would you like to come with us? We've already done our due diligence. We think this is a really good investment. We could do something similar with a bank as well, although because we don't have limitations on the size of the project, typically then we do, it's just IFC. But we could do a syndications even when it's a banking project as well. And then we have other mechanisms. We work, for example, with Amundi. There's a green bond platform where they sort of multiply IFC's efforts in their projects as well.
Yeah. Along those lines, somebody's asking, do you have any incentives for the private sector so they can promote green investments in the sector?
We do, but they're very limited. One of the, and to be honest, we typically have reserved them for residential space where there so many buyers that it becomes, it's a much more complex market. When it comes to hotels and retail, to be honest, as I said, green is a price of entry for us. We think that the business case to go green is just so incredibly clear. And so what IFC is, we don't want to do a subsidy for something that just has a 2-year payback period. But one of the things that we can do is our financing is typically longer. We're more patient capital. We stay projects for a longer period of time, or we could structure something that's much more innovative that again allows the owner to pay back something that they have done. But typically in the commercial sector, we have not released subsidies. IFC has done about $1 billion in investments for green hotels, and they've all been on commercial terms because of the incredible way to communicate that it just makes sense.
Yeah, and just to give an illustration, there is very hard to develop these funding mechanisms without the local ecosystem. Many times we found some projects that they have, let's say, like 70-80% of equity that they might want to invest in the country, but sadly in the country where the investment is going to be developed, there's not local investors that they can bank for the 20% of the project. And even the investment mechanisms are very expensive in that regard. And that's why it's very important for the governments to intervene sometimes to create these incentives or to create different funding mechanisms to develop that. And there's several questions about the government, but I think we will cover that in the next week, because they're talking about, in your experience, what are the case studies for government, or how can governments support these small investors and such. But we're going to save those questions for the next session. And we are run out of time. Thank you so much, Rusmir, for everything. It's really good. I think we are having a lot of interaction. I feel like I will send this email to the specific aggregators, because there are different stakeholders in the database, and I think we will take it from there. We really appreciate this, your time, and I think we are moving forward.
Great, and I think I saw a bunch of other questions come up with chat and Q&A, so maybe we can try to answer those in email format and send it out. And as a reminder, the webinar from last week is already up on the website, and the information from this webinar would also be on the website, and then you can continue to
Correct.
work with us, and we will kind of peel back the layers on everything.
Yeah, that's a really good reminder. We are putting all the videos in the same link that Rosemary was saying, so we don't have to create another link. And also the materials will be there as well, so you can download it from there.
Great.
Yeah, thank you so much, Rosemary.
Thanks a lot, enjoying, and I will see you all next week for government webinar and the week after for Edge.
Okay, thank you. Bye, everybody.